All right, everybody. Well, welcome. Welcome to our third session here on acquisitions and valuing your books. So I hope you're having a great Wednesday wherever you are. We got my good buddy Matt Knoll on here with us again. Hey, Matt.
Hey, John. How are you doing today?
Doing good, brother. Matt just had a birthday yesterday, everybody. Let's just all try to remember what it was like to be. It's 35, right, Matt?
Yep, the big 3-5.
That's a big one, brother. Anyway, we're really glad everybody's with us. I think we're going to have a really good little session here. And just make sure you all chip in. If you got questions, we'll kind of do like we always do. If we can answer them as we go, we will. And we want to make sure you get your questions answered. So just fire them away. But anyway, our topic today is what happens when you sell your book of business. So what we thought would really be helpful is just to kind of walk through the process, because this is not bragging. And then when you hear Matt's side, you're really going to know it's not bragging. But I added up before our talk here today. Right now, we've officially closed on 11 books, on 11 different agents that we've bought their books over the last few years. And we have 3 that are kind of in the hopper. They're in the pipe right now. So after doing that meeting, we kind of get a feel for everything pretty good and how it rolls. But Matt, tell everybody about you, and don't be bragging, just give them the facts.
Well, we're approaching the 2,000 with we opened one for you today. So we've since 2008, we're getting to the 2,000th transaction that we've done, which is it's pretty impressive, to be honest. So we've seen a lot of different books, and we've learned a lot over the way, and we've been able to really kind of sharpen our pencil in a lot of different areas, which is it's awesome. So.
Yeah, he's starting to brag a little bit there, guys. But no, we thought we've done, call it a dozen. Matt's done almost 2,000. But for most people, almost all the listeners today, you're going to do it one time. And so it can be, it's intimidating maybe, or a little scary or frightening, or you've never done it before. And so you really don't know what to expect. So we thought this session would be really helpful just to kind of walk through a deal and kind of what it looks like, what it would feel like, what to expect. So that's what we're going to try to do today. So we're going to get rolling here. So, all right, Matt. So all right. Jump in here, and we've got a few bullets on the next page I know to hit, but take off. Kind of the first step is we got to get a number. We got to get a value on this book. What's it worth?
Yeah. So, the most important thing. Well, first off, confidentiality obviously is the most important thing for any agent that we work with. So that's like the forefront of everything. So before we exchange any information with you, we'll provide a confidentiality agreement for you to know that any data provided to us is strictly for valuation purposes. So we'll both sign that. That's a quick deal. And once we have that in place, then that's where we really start to do the transfer of data that we need to do the valuation. The way that we do look at these books is we look at them at a policy by policy basis. So when the easiest way to do that is for us to view your most recent 12 months of commission statements. Some agents are okay with pulling down data. They have files they can send over. Some don't, and we kind of leave that up to each agent that we work with, how they want to get those commission statements to us. We are more than happy to go in and pull commission data from the carrier's agent portals with obviously the permission of the agent that we're working with. But if for whatever reason the agent doesn't feel comfortable with that, they can pull the data down themselves as well. So we're pretty flexible on that piece, and we're happy to help with any
I got a real quick comment on that. So from your end, is it usually just the easiest, unless you got a guy who's really kind of tech savvy and all that stuff, is it the easiest thing for Access Capital if an agent will just give you the login information and let you guys go get it for all the carriers that they want to, that they want in on this transaction?
Yeah, I think either way it works, but yeah, I mean, on the agent, definitely, because all the portals to pull the data are different. We've worked in these agent portals with all the carriers on a daily basis. So we've over the years learned some pretty good tricks to be able to pull down what we need in an efficient manner.
Yeah.
And on a few different carriers, there's some data that we like reports that we'll need to pull, but yeah, for the most part, it is easier if we pull it down. But again, that's completely up to the agent on what route they want to go.
Yeah. So, all right.
So I guess how we use the data is once we have all of the commission statements, we essentially put them all together and use them to figure out the true in-force book of business, all of the policies that are currently paying commissions. And then we project those out through an actuarial model. So we actually value each policy, so down at the policy level, and that's how we arrive at our overall purchase price. So a lot of the variables that we need are present on those commission statements, like I said before, and it's very rare that outside of those statements that we need anything outside of or additional. So.
Yeah. All right. How about that last bullet there? Cost of valuation. You want to, that pops up.
Yeah. So I think this is probably one of the most important bullet points is that we don't charge for valuations. We want to make this as easy as possible for an agent. I understand, exactly what you're saying. A lot of agents haven't really done this before, don't know, a lot of them don't know that this is an option even. And so we want to make this as easy as it can be, and we also understand there shouldn't be a cost involved with doing that valuation. So essentially what we do, we don't charge. We'll take a look at your book of business, provide you with an offer. If we don't agree on a price to sell, at least you know what the current market value of your book is, and our friends. So
that's great. Hey, I got a question for you, Matt. So this happens pretty frequently to me, is since mainly the ones that we're have interest in, and the way our model works, which we'll talk a little bit later, normally it's for people that are retiring, or they're kind of at that stage of their career where they're very close to retiring, or they're really wanting to start limiting. But dang, now I forgot where I was going with my question. What was I going to ask you, Matt? Oh, I know. If a guy says, hey, I'm thinking this is probably, I'm maybe 2 years out. I get that a lot. I'm like 1 or 2 years away. Would you value their book for them now with that in mind, knowing that really nothing immediately is going to happen and we're maybe 12 months or 24 months away from going? Does that happen to you?
Yeah, we take a look at it. We probably do it if we know that the agent isn't looking to sell it right now. We might just take a high level approach to it.
Yeah.
Kind of maybe look at the makeup, say, okay, well, and we've done exactly the same thing on a couple different deals with you guys, where that's like, well, maybe if they could improve on a few of the, increase the value on a few different portions of the book, in a couple of years, it'll be worth a lot more. And so it's kind of, I think that we'll take a look at it and kind of figure out, does this make the most sense to the agent now? Or, are there areas that you could improve on? And I think we talked about this on a previous discussion where we can kind of be flexible on what parts are sold or what parts aren't sold, or how they can maximize the value of that book.
Yeah, that's great. Good point. I think we got a really quick question. Is that kind of a lead into this?
We have a couple questions. Jeff wants to know, can I sell a portion of my business and stay active in the business? Will I continue to service, or do you take over the service?
So that's actually a really good question. So essentially Access Capital with New Horizons there's a couple different main paths that you can go down. One is obviously the retiring agent that is looking to just transition the book, pass on the servicing and everything. That's path one. Path two is where an agent either needs capital, doesn't want to service their whole book anymore, wants to kind of quasi-retire maybe. So yes, we're extremely flexible. We can buy one book. It's kind of limited to the carrier. We can buy like a carrier out of like 5 or 10 or whatever. And so we can kind of piece it apart. We can buy half of it. And depending on product type, that's kind of, if you are looking to stay active, those clients can still remain your clients. Or for example, with Medicare Advantage, New Horizons would, if we were buying if we were buying your Medicare Advantage book of business, New Horizons per CMS would be required to take over servicing of the policies. So there's a couple. That's kind of I know that's a lot there, but there's a couple different paths, and it's kind of comes down to what are you looking to do, and we can kind of build something that fits exactly what you're looking for.
Yeah. One other real quick one, and then we'll keep moving on. What have we got here, buddy?
What kind of minimum are you looking for?
What's the smallest book you've ever bought?
$2,000 purchase price.
Okay. There you go.
So yeah, we don't really have any maximums or minimums. It just all depends on if it's something that we can value and purchase. So.
Okay, we're getting some other ones, but we'll keep moving, and then we'll catch up a few more questions here in a bit. So, okay, let's get right on to the purchase offer. Kind of hit those couple of bullets there for us, Matt.
All right. So once we have all the information we need, which is this commission statements for all the carriers, your in most cases a copy of your commission schedule, so we can project out the book, so we know how each of those policies will pay throughout their commissionable life. Once we have that information, it takes us usually about 3 to 5 business days to value the book and get you a written offer. Beyond that, there's, we send you an offer. If you think it looks good, we'll move forward. Obviously, there's a few different variables that go into the structure of our offer that we discuss at that time. Some agents would like to spread out the payment for tax purposes. There's a lot of different variables, and so it kind of comes, that's where the conversation begins, and we can kind of start to kind of really tailor a deal specifically to each agent.
Yeah. So on that second bullet, choose to accept or counter, what's your experience been on the counter side of things? I mean, if both parties say, yeah, that sounds fair, that seems reasonable, I think that's right on the money, we're off and running. But do you get a lot of counters, or when you get the offer out, is it like pretty close to where it's got to be, or what's your experience on that? What's the take on that?
Yeah. So when we make offers, what our main thing, and one of our founders' main, what he's said this since I've started here is, we're out here to make the best offer we can to buy a book of business. We're not out here trying to, make small offers and steal business, because what we do is we rely on referrals and repeat business. That's where a lot of our, all of those deals that we talked about have come from. And no one's going to refer or obviously come back and sell another book of business if we're not sending out equitable offers up front.
Yeah.
Sometimes if there's we might have wiggle room when we have to go, but we'll have to go back and kind of work with our valuation team to see if we can make some tweaks to our model to increase the offer,
Yeah.
if it comes to that. But we usually try and come in with an offer that we feel is strong, as strong as, or as strong as it probably can be.
Yeah.
With some a little wiggle room. So,
hey Matt, you told me one time, like you had one agent that had sold books to you, like it was a crazy amount of time. You remember what that was?
yeah, 18.
So one agent has sold 18 different books of business to him. So that tells you a lot right there. I mean, really, if that guy's model is strange for one, but just to keep coming back and doing it, that's
for his deal, it actually for him makes a lot of sense because he's just can generate leads by himself. That's all he does, and so he's essentially just snowballing it. So he's selling them, getting the advance, selling the renewals, and then keeps growing and growing and growing. So yeah, he's kind of, I mean, 18 is, I think the next one would probably be like 10 maybe, but he's kind of leveraged our services to be able to really grow his just his entire business. He has a couple other things outside of insurance as well that he's used the capital for. So
interesting. All right, let's keep moving here, guys. Okay, let's talk about the agreement, what that looks like and what needs to be done on that.
Yeah, so if we come to terms on a purchase, or on an offer, we'll put together a purchase agreement. Everything will be handled over here from all the language of the agreement, getting all the forms to transfer the business between that will be submitted to the carriers. Obviously, before any of this is sent, the carriers won't be, or the clients won't be made aware of any of this beforehand. But we have we'll get all the documentation in place with our legal team and the legal team and integrity to essentially send it over for signatures. We'll in New Horizons will countersign it, and then we'll submit everything to the carriers for processing.
Yeah.
So in the timeline, go ahead.
Well, I was just saying, so like that part right there, just I think in the agreement itself, besides the terms of the agreement and the offer, there's also a list of every policy, every customer that's being purchased in this agreement by carrier. And then all the assignment of commissions that are in there, these documents that Matt's talking about. And that's the part really where when the clock is ticking and we send out those assignments, because what's going to happen is those commissions are going to be assigned to us if it's our deal. And so some carriers are really responsive and others are a little bit of work where we're trying to get those documents in as quickly as we can so we can close.
Right. And we've worked, I will say we've worked with, it's becoming rare and rare that we see a carrier that we haven't worked with. So they all have their own processes and everything. But I think kind of the point I want to drive on this, we're getting into the weeds a little bit of the process that we're going item by item, but this is all stuff that either Access Capital does or New Horizons does. The agent that we're working with essentially is responsible for helping us get the statements, accepting the offer, signing the agreement, and getting paid. So that's kind of the whole our whole mindset behind Access Capital is to make this as simple as possible and as transparent as possible for the agents that we're working with.
Yeah. All right. You want to hit a couple questions here?
Yeah, we've got one about valuation. Brian asks, what would be a possible value for a book of business that generates $250K in commissions annually?
So it depends on purchase or on product type. Each product type, just through our model and through the assumptions that we use, will generate a different multiple based on product type. And I think probably the most helpful thing we can do is after this, we have a calculator tool that we can send out that you can plug in your monthly commissions by product type, and it will give you a range of where that purchase price should fall. And rather than diving too much into multiples right now, I think that would probably be a good thing we could send out afterwards.
Okay.
Yeah, I think that takes care of the next question too, about being a rule of thumb for selling the business like 2 times book. So I think that would answer that same question.
Yep.
Is this for selling Medicare business as well as life and P&C?
Yeah, so we essentially buy any business that is guaranteed, renewable, and individually underwritten. So for PNC, that's really not something that we can purchase. Even throughout the entire Integrity network, we really haven't been able to find a place to be able to do that. But so what we focus on are obviously the senior market, supplemental health, life, and all the other essentially senior market products. But the PNC is where we're unable to work with, and most group products.
Yeah. Okay.
Yeah, and then the next questions are about that as well. Group health and employee benefits.
Yeah, I think we'd have to look at them on a case by case to see if there's a way we can make it work. I don't want to say yes or no, but typically group is something we kind of steer clear from.
Okay.
Okay.
All right. Client communication. So this is kind of the way that our process works. So let's say we've gotten to the place where we've got the offer, the purchase agreement's been signed, the commission assignments are going out to the vendors, the different carriers. What we've got to do, because our model is a New Horizons, Medicare Allies, is we're going to take over those customers and really treat them like they're in our own agency here, because they are, and treat them just like they're a customer of ours here locally. So we've got to get all of that client info into our CRM so we can begin to communicate when we're ready to all of those customers. So I'll say the first few that we did, guys, a lot of the agents that we're dealing with, they didn't have their books of business in any kind of electronic CRM. And so we physically got the files, brought them up here to Decatur, and our staff put them in there, one by one, so that we could begin to communicate with those people. Matt's really been able to help us with this part, because still a lot of the guys that we work with, they've got their own way of doing it. They haven't used a CRM. They're sure not going to start on one now, but he can give it to us just as he does the offer and does the valuation. We can transfer all that client info into our CRM, and it really gives us a huge head start on rounding that out so we can begin communicating. So that's step number one for us. And then
let me add one thing there, John. Since joining it with Integrity, we have been able to make some pretty good strides with a lot of the carriers for them to be willing to send over the client contact info once we have a deal accepted and in process of transfer, to kind of ease that, because that's a big ask sometimes for agents that have files that go back to the 80s, the carriers have been willing in the last 6 to 8 months to really play ball with us on that, and to really make this a simplified process.
I know Kelly here, who kind of heads that up for us, getting it all in, is really, it made her job a whole lot easier getting that stuff in there. So, because we got to have it. So then from there, the way that we've been doing these is a letter goes out from you, the agent, on your behalf, on your letterhead, if you have letterhead, to kind of say, this is what's going on. I'm either retiring or I'm joining new horizons, but we communicate to your customers that Medicare Allies is going to be taking over the service of those policies. So we craft it together with you. It isn't something like a boilerplate letter. We really take a lot of attention and carefulness with that, make sure that we're all on the same page. But that goes out then to all of your customers, kind of give them a heads up, this is what's going on. And then right after that, we'll send out a letter from ourselves, introducing ourselves, our team that's going to be helping them going forward. And then we do a personal phone call. So every customer gets a personal visit. It's more just an introductory, kind of a welcome, get to know each other a little bit. We take notes on it, but we really go overboard at that very beginning because we want to make sure those customers really, really feel at home. They feel welcome. They feel confident, all of that. We feel like we've got to go overboard on it just because these are people that might be 5 states over from us. You know, we're not going to be in their homes and they're never going to come here to our office, most likely. And then I'm just rattling here, Matt, stop me if you got anything to add, but they kind of go into our regular routine, just like what we do for our local Sam's Hockaday agency here, where we do a newsletter every other week.
Every week.
Or is it every week?
Mm-hmm.
Every week. This is one that we produce here, our team does, and goes out to all those customers via email. It's not a businessy thing. It's a lot of fun. It's educational, it's health, it's family, it's businessy too, but it's more than anything, just that we're together and kind of a lot of human interest in it. And then we are a company that works anniversary. So they go into our system where they'll be receiving at least one phone call every year from us, about 60 days ahead of their anniversary of their effective date of their policies, just to do a review, make sure everything's good, any changes, all that kind of stuff. So it's really great. You know, we love this business. We love serving those customers. And I think for the agents that we've bought their books, they really, really appreciate it that when they're seeing their customers at Casey's or at Kroger's or, you know, wherever it is, at church, at the ball game, that customers feels good about being with us now. Don't feel like the agent dropped the ball on them, you know? So what are you going to say, Matt?
Well, I was going to say that I think you pretty much said it, but to summarize, yeah, and this is a note at the bottom of this slide, is that for Medicare Advantage, PDP, the carriers require a letter be sent, but you guys kind of go above and beyond that. The letters that the carriers require, you know, drafted by the carriers, and there's not much wiggle room on it, but you guys, to build that relationship, get ahead of that a little bit and, you know, really make sure that it's personalized and that the client understands what's going on. And I just wanted to add that.
Yeah, well, thanks. You know, I'll say the ones that we have the best results with are the agents who were really involved with their customers. So if that agent that's wanting to retire or move on, if he's like dearly loved or they're really thought so highly of, that recommendation that they make to us, that referral to us, just goes a long, long way. And so we really work hand in hand with the agent through that whole process as we jump in there and kind of get the handoff from them to take off with their customers. So I like it. Closing.
All right.
Okay.
So we can just run through these bullet points. The timeline, we've kind of walked through it, but if you add it all together, it takes us about a week to value it from acceptance that's to closing. Once we submit the documents to the carriers, usually takes between 2 and 4 weeks. So it's about a month, a little bit more than a month usually, to get everything buttoned up. We've on our previous discussions, John, we've talked about how we have some flexibility to, if there's some companies that are taking a little bit longer to move the business, we can kind of parse out the carriers that have closed and get the agent paid. So we're very
really flexible. And that's a big deal, guys, because you might have a couple of carriers that are dragging their feet for whatever reason. We can't get the assignment doc, approved, and Matt and his team will go ahead and close out on what's in house, so the agent can get paid. And then let's say the other stragglers come in the next couple of weeks, and we just settle up on that after those come in a couple of weeks later. So we don't want to pull anybody up. We had a guy, good buddy, moving to Florida, and had already closed on his house here, and we had a few carriers dragging their feet. Well, we were able to get him most of his money right when we said that we would, and then the rest of it once we got the carriers to finish up their job.
Right. And so let's just say, like, within a perfect, if it's one carrier on the second bullet point, when they essentially tell us that the transfer is done, we'll initiate an ACH transfer to your bank, and that's the same day the transfer is initiated. It can take between 1 and 3 days to show up in your bank, but we initiate it as soon as we get notification that that the transfer is complete from the carrier. Within here, and this is more probably about the offer and purchase agreement, but our deals are typically structured 80-20, which means 80% of the purchase price is paid at closing, with the remaining 20% payable after a certain number of months. Usually it's kind of product specific on and that could be a whole separate discussion, but we do have flexibility within that as well. If there's if say an agent wants to take $0 this year, we can kind of make a custom payout structure, maybe from a tax perspective, or just future income perspective or whatever. So we're very flexible within how we can pay that, but typically the 80-20 is our structure on those.
Yeah, all of them have been that way. I will say one other thing that happens is a lot of times we might start receiving these commissions before close. Some carriers will be really good. Money starts coming to us right away. We still haven't closed. Well, that's not our money yet. So even though it comes to us, we just pass that through weekly back to the agent until we close. So we're all motivated to close it as quickly as we can and make sure the agent gets paid as quickly as he can, the seller.
All right. On the last bullet here, agents who want to stay in the business, John, you can speak to this as well, because we've actually got, one of our first deals we did, we got creative with it, but there's a couple different ways you can do it. Is one, the agent can just get recontracted with the carrier and just build up a whole new book of business. Obviously anything that they sell after we buy the book, that's theirs, and then, if they want to sell it down the road, we're happy to value it, that book as well.
Correct.
There's been, and you can probably describe this one a little bit more, is when an agent had a book of business or we only bought part of it, and you guys are kind of passing through the commissions that weren't purchased.
Right.
And then in the goal that he's going to retire in the next couple of years, but he wanted to still maintain those clients, possibly, move them to different products if needed, and then sell it once he's ready to retire. So
yeah. I think for the most part, it's like what this is saying is it's not cookie cutter. The regular deal, like Matt just explained, where the agent is ready to get out, they're clear cut. But if we have a guy or a lady that says, I'm ready to close to be retiring, I'm ready to move on this, but I want to stay in the game for a couple more years, then we've got a couple of ideas that we've used in the past to be creative, that really works well for all of us. So we can talk about another day or on a one-off here, but yeah, we'll work with you as best we can. We kind of went a little long, Matt. you guys, both of us windy on here. Is there any more questions?
Yeah, we have a few. Another one about types of products you buy. Do you purchase individual marketplace health and insurance books?
We'd probably need to know a little bit more about them before we'd value it. So we could take a look at it and see if it's something that we could do. Obviously, we just would have to make sure that New Horizons was able to service it and going forward and all of that stuff. So again, I think that'd be kind of, we'd want to do a high level look at it before we go through a full valuation.
Okay. Oh, Anne brings up a good point. On the previous slide, we skipped over this, but what happens if a client calls me after the sale of the business?
Well, yeah, we didn't really touch on that. We could work something out, and that if you're no longer in the business and you want to refer that business to us, and we can give you a finder's fee, or we can compensate you in some way with that. I know there's more and more, depending on the product, there's more and more compliance issues like with Medicare Advantage and PDP on that stuff. But, or the other thing is, so we can do it that way, but then the other way, like Matt was talking a little bit, is we can give you a new contract, a new writing number, could be with the same carrier. So you've assigned your book, let's say with Aetna to us, but now you still have a need or a desire to sell some business. If you get a referral to you and you want to use Aetna, we would just reappoint you with Aetna, give you a new writing number. And if it's outside the book that we bought, because those are ours now, then yeah, go at it. You go write them, and you could create a whole new book there, possibly.
Okay, Pam asks, is there a clawback clause to get out of the deal if there's a holdup?
Typically, no. I guess yes and no. If there's a carrier that won't, say we come to an agreement on to buy two books of business with different carriers from you, and one of the carriers won't transfer the book for whatever reason, we would amend the agreement and strip that carrier out. So it would essentially remove it from the agreement. So that's still yours, and then we'll be able to close on the other one that did close. So it's not really a clawback. It's just more of a we can add or remove stuff from the agreement as needed.
Okay, does selling a book, when selling a book, does one need to sign a non-compete clause?
Again, it depends on the route we're taking. If New Horizons would be taking over the servicing of the book, the non-compete would be essentially on those policyholder relationships would transfer to New Horizons for servicing going forward, right? So it's essentially a non-compete on those policyholders in the policies that they're in right now.
Okay, and the last question we have here is, do your contracts have a no confidence clause if one party is not holding up their end of the deal?
Not that I think I need some clarification on the question. But I think let's follow up on that with in an email afterwards.
Yeah, sounds good.
Hey guys, I really appreciate everybody joining in and listening. And I'll just put two other little ditties on here. We're going to do one more of these here in the next couple of weeks. So be looking for that. And I think what we're going to try to do is do a couple of interviews with agents that we've bought their books in the last couple of years, just see how it's going, how they've been, satisfied, not satisfied. If they're not satisfied, we're not going to have them on here. But no, I mean, really how it's going with them. I think that might be interesting. And then one other thing that I think is really worth mentioning right now is, if any of you that are watching are in the Medicare Advantage business, I think everybody knows by now that CMS has brought down some pretty stringent rules for recording appointments going forward here in the fall. And it's going to make it a lot more cumbersome for a lot of our individual agents that are out there. So in fact, like just yesterday, I had a good buddy of mine that we've been talking to. I've known him for a long, long time. And really, he felt like he was a couple of years away from retiring and selling his book. He called me yesterday and said, John, I'm done. I'm not gonna go through this. And it was mainly MA related with the new compliance that it looks like we're all going to have to be faced with here this AEP. If that happens to be you and it's something that you're concerned about and you're thinking about moving quickly, I'm just going to encourage you really do have to move quickly, because if we're involved in it, we got to have everything bundled up really by mid-September. And so it's just getting kind of tight. So I feel like we've talked around here, there might be more of that. Matt and I have talked about it. I won't be surprised in the next 30, 45 days, more guys are reaching out and saying, you know, I've been thinking about retiring in the next couple of years. This might accelerate where I'm at right now. So if it is, make sure you reach out to us quick if you'd like for us to be in on that discussion. Okay, guys?
Yeah, let me add one thing to that real quick, John, is for the MA space, there's a blackout period where we can buy books of business that the carriers, they won't do any transfers during open enrollment. So essentially we would have to have all paperwork in to initiate the transfers by mid-September.
Right, that's what we're thinking.
So that's just, otherwise we have to wait till February or March of 2023 to look at the book again. So
yep. So keep that in mind, guys, if that's you. But again, thanks everybody for listening in. Anything we can do to help, just holler, okay? Thank you, Matt.
Yep. Thanks, John. Thanks, everybody.